Mark. Jim King of the Jungle. Okay. Pressure, what's happening, dude? Good evening, good evening. We're just getting ready to get started. Lee, good evening. William, Victor, Don, Lucky, John. All right. Boston Ron. Holy cow. Boston Ron's in the house. I haven't seen or heard from you in a while. All righty. Let's get rolling. Oh, I gotta get some more lighting. Lighting ain't that great in here. Oh well, is what it is. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Good evening. Recently get busy. Okay, money make. Okay, thank you. Way to go. Brian, good evening. Where was I? Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, take you guys along for the ride for a simple, safe, predictable, consistent 1% per week. Think about it. That's it. Just 1% a week. It's a simple, easy trade. It was created for a 9-year-old. 19, oh, not 19, quite a while ago. 2008. Okay, 2008, my 9-year-old daughter jumped on my lap, said, "Daddy, what are you doing? Can you teach me?" Well, how do I teach a 9-year-old to trade stocks when most adults don't get it? Most adults, they have no clue. So I'm supposed to teach a 9-year-old how to trade stocks. Okay, great. So here was the challenge. It had to be a simple strategy. It had to be safe. Brian might need a new audio cord. Okay. Hey. All right. Oh, what was I saying? Getting interrupted by all the stuff over here on the cameras. All right, anyway, simple, safe, predictable. The income had to be predictable and consistent. And then here's the kicker: no way for her to lose. That was number 5. So how, CJ, how you doing? How do you create a trading strategy for a 9-year-old when most adults don't get it? Well, I had 5 simple rules. Rule number 1: if it's not on the list, don't buy it. Now you might be asking, what list? Well, the list that I created of stocks, let me give you a brief description. That way you'll understand what they were. The only stocks that made it onto my list were companies that were consistently profitable, meaning they've increased their dividend payments for more than 2 decades. That's 20 years. So if the company consistently profitable for 2 decades and it had weekly options, it made it to the list. So rule number 1 was never buy anything not on the list. So instead of looking at 10,136, whatever the number is now, that's how many companies there are. Over 10,130 some odd, weird number. But that's a lot. But for my daughter, it was a very small list, only about 300 companies. If it's not on the list, don't do it. Rule number 2, never sell at a loss. It defeats the purpose of the whole game. And yes, this is a game. Rule number 3, make sure the company's consistently profitable. And say wouldn't have made it to the list if it wasn't. Rule number 4, weekly options only. And rule number 5, make sure the numbers work. Now, when I say make sure the numbers work, I'm actually going to go over a bunch of examples this evening. Chasing Jack, how you doing? You showed your APLD this morning. It was too much money on one stock. I made almost my 1%. Cool beans. Wow. All right, so as the evening progresses, I'm actually going to walk through a few trades and show you exactly how I do it, because it's really not that difficult. And if you brought a pencil and piece of paper, you might want to take a little notes. And note number 1 is never buy something you don't want to hold on to for the rest of your days. Think about it. Why would you buy something and then sell it? I'm a beginner trader. Hey, Mayara, good evening, good evening. So never buy something you don't want to hold on to. Now, I only have 2 criteria for the stocks that I'm looking at, okay? And when you break it down to whatever your criteria is, I only have 2. 1, 20 years of consistent profitability, and 2, weekly options. That's it. It only comes down to about 300 companies. KB, what's happening? Good evening. Would you rather watch it? Okay, that's funny. Thoughts on XRP? Sorry, Tony, I only do dividend stocks that have consistently increased their profits for 2 decades. Okay, XRP has not been around long enough. Now, every once in a while, I will bend the rules here and there. Okay? So bending the rules here and there every once in a while. But I usually with a good reason. Usually. I don't do stocks that don't have historical performance. May I ask why only dividend stocks? Okay, that's a good question. Number one, it's a terrible thing. I was going to say my game, my rules. That's just a terrible thing to say. But no, the reason I only like dividend stocks is number one, it's easy to measure their performance based on just the dividend itself. Reason being, let me explain. Because a dividend is a portion of the company's profits that they made. So if they're profitable, well, you continually get a share of those profits. That's number one. And if they're profitable continuously, year after year after year after year, it's easy to see how well they perform. Because you may like, the greatest, you may think something's the greatest stock on earth. Well, great. Does it work for what it is you want to do? For what I want to do is a safe, predictable, consistent income. And that income that I want is 1% per week. I try to make it easy and simple. Now, another thing about dividend stocks is if you take a good look at them, right, they have a tendency to do the same things over and over and over again. And where you have consistency and patterns, well, it makes it easier to be on the winning side of a trade rather than on the losing side of a trade. So I'm trying to make it as simple and easy as possible. And remember, it was created for a 9-year-old. So things had to be predictable and consistent. Okay, so if a company is consistently profitable and oh wait, hold on a second. Let's take a look. This might help a little bit. Let's get this out here. This here is an EX dividend calendar. Now, each one of these little green dots represents a company that pays a dividend, okay, portion of the profits. And if we own part of that, if we own shares, we own part of the company, which we are entitled to the dividends. So the dividend is represented by these little green dots, okay, Lowe's, Abbott Labs, AbbVie, Colgate-Palmolive, Procter & Gamble, so on and so forth. So if I know when they're paying their dividend, hey, Lindarella, if I know when they're paying their dividend just before they make their dividend, okay, the stock has a tendency to go up in value. So by knowing when a stock is going to move, well, that's great information, but what do you do with it? David, what's happening? So when you know stock's going to move, well, you have a little tidbit of information that someone else doesn't have. But what would you do with the information? There's so many different trading strategies you can use. So what is best, easiest, and safest and predictable? Well, that comes down to the covered call because the stock doesn't have to do anything. So if I know dividend stock, when it's going to move, if I do a strategy that is simple, safe, predictable, and consistent, if I have everything going in my favor, it just makes winning just that much more easier, that much more predictable, and that much more consistent. I love consistency, predictability, and profitability. Now, I'm not greedy, so I'm only wanting 1% per week. 1% a week comes to a little over 50% per year. So I'm perfectly okay with that. That's why only dividend stocks. They're predictable, they're consistent, and if you follow them, you have a good idea of where they normally go, what they normally do. So if a company's like 100 years old, such as Colgate-Palmolive or Heinz Ketchup, okay, they do the same things over and over again. Oh, Pepsi Cola and Coca-Cola. They do the same things over and over and over again. So what's the difference between 2025 and 1925? Well, summer it still gets hot, winter it still gets cold. So Coca-Cola is still making Coca-Cola. So if I know the predictability of the movements every 90 days, another important thing about the dividend calendar, it tells you Hormel pays a dividend on the third week of the quarter. Every quarter, first quarter, second quarter, third quarter, fourth quarter, third week of the quarter, Hormel. So I'm looking at Hormel the first week of the quarter. And if it looks good, I'll buy it. So hopefully when it gets to here, I'll be in, I'll be out with my profit and then moving on to the next one. The next one, well, why not Caterpillar? Lowe's? Why not any of those? See, if you pick a good roster, just like a baseball team or a basketball team, if you pick a good roster of something that always performs, Well, you can't help but be consistently profitable over and over and over and over and over. It's kind of boring if you think about it, because I look at the exact same stocks every 90 days. Because you get the first quarter, January, February, March. And then the second quarter, April, May, June, starts the whole thing over again. Because there's only 13 weeks in a quarter. So you just break it down. 365 days in a year. Great. 266 trading days. 4 quarters. 13 weeks. 66 trading days. And 66 trading days in a quarter, 22 trading days in a month on average. So you break it down one at a time, and then you have a list of 300 companies that are consistently profitable at weekly options. Well, great. Throw them into the calendar. It tells you exactly when to look at them. Okay, so first week I'm looking at Illinois Tool Works, Nucor, APD. Oh my God, what is that? Cardinal Health, Fortis, O'Reilly, General Dynamics, blah, blah, blah. And then you go to the next one, McKesson, Roper, Hormel, AbbVie, Abbott Labs, blah, blah, blah. Every single week the list changes. Well, every single week, these companies are consistently profitable, or they wouldn't make it on my list. This is not just the everyday list. I'll show you what that looks like. Okay, that's what the everyday list looks like. 142 companies, 31. I don't need, what is that, 16, what is this, like 4, 6, 8, blah, blah, 1, 2, 3, 4, 5, 6, 7, 7 times 4, 20, 28 there, another one. There's a whole bunch of them just this month. These are every single dividend stock, every single one. But I don't know how many years they're consistently profitable. That's why I have certain lists, because I only want to look at stocks that, let's just say, an ace in a hole. Okay, you know what I mean? Or ace up my sleeve, however you want to look at it. I want all the odds and probabilities in my favor, because with a 9-year-old little girl, if she starts losing her money, she's going to start crying, and mama's going to get involved, and daddy's going to be sleeping on the couch. Yeah, no, thank you. Simple, safe, predictable, consistent, and a way for her to lose. That's the strategy I came up with for my 9-year-old. That's what I'm sharing with you guys. Okay, I'm not asking for anything. Okay, I'm not trying to sell you anything. Okay, we're all adults here. We know how it works. I got shit to sell. You know how that works. But I'm not trying to sell you anything. I'm just here to answer questions and show you what I do. It's not that difficult. Okay, and I'm not going to hold anything back. I'm going to show you everything from finding the stock, because we're only going to be looking at dividend kings, dividend aristocrats, dividend champions, dividend contenders, and maybe something on Warren Buffett's list. So those 5 lists right there should give you about 500 stocks to look at. If you have something else you want me to look at, I'll give you my opinion. Pretty much you ain't going to like it, because I'm at that point in my life where I really don't care, and I'm not looking for anyone's approval, and I'm not looking to make anyone feel safe and happy. I'm going to tell you just like it is. If I don't like it, I'm going to tell you I don't like it, and I'll tell you why I don't like it, because I have a specific plan. Now, there's a lot of people out there just like me sharing other strategies. My strategy is simple. Hey, I invested dividend stocks for weekly cash flow. That is it. Okay, I have no hidden agenda. I have nothing I want. Ooh, Sergeant Zyper, first one to chime in with something to look at. Riot, let's take a look at Riot. So, that all being said, you're going to need glasses for this. Even though the screen is like a 5-foot screen, I still need my glasses to see it 4 feet away. Getting old sucks. Don't let anyone tell you otherwise. It does. Stuff just stops working. All right, let's go there. Let's go here. Let's get this out of there. Let's go back to here. And this is what mine usually looks at from the beginning. I like looking at a 1-year chart. I like looking at the numbers. And I like looking at the stock options, because I sell weekly stock options against pre-qualified dividend stocks. And those are the stocks that are continuously profitable. Those are the ones I like. So somebody want to take a look at Riot. Now, Riot does not fit that category, but we're going to look at it anyway. Now, whoops. Okay, try it one more time. R-I-O-T. Okay, now it takes me 3 to 4 seconds to figure out if I like the chart or not. Now, the reason I say that, I'm looking for 5 things: the high, the low, where was it a year ago, where is it now, and what is it doing? You know, the flow of the river, the trail through the woods, the motion of the ocean, whatever you want to look at. Down, up, down, up. That's it. Simplify it. Don't make it more complicated than it needs to be. A year ago it was here. It dropped. Then it shot up. Then it dropped again. Now it's shooting up again. Stocks do the same things over and over again. They go up, they go down. They go up, they go down. That's it. That's it, and that's all. All right, so let's take a closer look. Before we do, remember I told you the numbers got to work? Rule number 5, make sure the numbers work. Well, here are the numbers for me. Number 1, what is the current price? $12.51. Great. Now I do what's called a covered call strategy, which means if I'm buying it at $12.51, I'm going to sell it to someone else for the closest strike price there is, and that's $12.50. Here are the strike prices right there. If you don't understand what a strike price is, or you don't know what a covered call is, there are literally hundreds of videos available to explain it. Simply put, I'm selling somebody the option to buy something I already own. So a covered call is I'm buying the stock and I'm selling somebody the option to buy it from me at basically the exact same price I paid for it. So if I'm paying $12.51, I'm going to sell it at $12.50. Now you think I'm losing a penny, and you're thinking, why the hell would you do that? Well, I want the insurance premium. Let me explain. Stock options are insurance contracts. And we all know what an insurance contract is. You pay a certain amount for a certain type of protection. Home, you want to protect your house against fire, theft, blah, blah, blah. Auto, you want to protect yourself against car accidents, okay? A rental insurance, want to make sure whoever's covered. Same thing. Well, stock options originally intended for people who had big positions, and then they would buy a put if they thought the stock was going to go down, so the put value would go up, and they'd sell a call if they thought the stock would do that. So it was an insurance policy. Now you need 4 things for an insurance policy: a beginning date, an ending date, consideration, which is the money, and then a meeting of the minds, also known as an agreement. I'm buying this from you at this price by this date. All 4 items to make a legal binding contract. So the money, this is what I'm looking for. $12.50 is going for 43 cents. Now, 43 cents does not sound like a lot, but look at it from a different point of view by the numbers. Okay, 43 is how many percentage of $12.50? Well, 1% of $12.50 is 12. Okay, $12, 1% is 12 cents. So 43 cents is almost 4%. Now think of it that, like my little hat, 4% for 1 week. Because we're looking at this one right here, 18 July 25. What does that mean? Now 18 July 25, that's this coming Friday. So whatever options, whether I buy them or whether I sell them, they're all going to expire on Saturday. Now we say it expires on Friday, but they don't. They expire on Saturday, but you can't do anything after 3:59 p.m. 3:59 p.m. on Friday, okay? Market closes at 4. Okay, at that point you can no longer do anything, but they officially expire on Saturday. But that being said, if I buy it here, sell it here, I get almost 4%. Almost. See, 48 would be 4%, but this is about what, 3.8? But that's a nice percentage for 1 week, because if 52%, wait a minute, if 1% is 52% for the year, 2% would be over 100%, 3% would be over 150%, 4% would be almost 200%. That'd be freaking awesome. Can you imagine doubling your money every 6 months? That would be great. I'm not saying that you can do it here. I'm just saying I'm looking for 1% a week. That's 52% a year. This one here is offering at this moment in time just a tiny bit below 4%. Well, let's check it out. Now, before I do that, okay, now I saw the 1-year chart, fine. I'm dissecting the numbers. Well, what I'm buying it for, what I'm selling it for, and what premium I'm collecting, well, that all works for me. So now I want to dive deeper into the chart to find out the little intricacies rather than the 1-year chart. I want to see what I think it's going to do in the next 5 days, because if I'm buying it tomorrow, I want to be out on Friday with my profit. So let's actually do one of those trades. Winning team life, woohoo! Thank you for clarifying that for me. Oh, alrighty then. Okay, James, check the screen on TikTok. What? Oh, hold that thought. It wasn't mirrored. Wait a minute. Now is it mirrored? Now it's right. Okay, sorry about that. All right. Sorry about that, Laurie. Thanks. Wait a second. Dow. Oh, Enron wants to take a look at Dow Chemical. Okay, hold tight, Enron. We're going to finish up with Riot first, then we'll take a look at Dow. Okay, so let's check it out. A year ago, Where are we? Right there. What? 1076. Okay, now we drop down to 633. Oh, I can't see that. All right, we dropped down to 633 back in September. All right, then we shoot up to the high of the year, beginning of November, and that's 1284. Well, imagine that. She finds the bottom on TDS day. And that's at 619. Actually hit like a quadruple bottom. Look at it. 1, 2, 3, 4, 5. Five times 619. Well, 5 times at 619 as a bottom. Well, that's a pretty good support, which means if it was going to go any lower, it probably would have. It hit it 5 times. Not, every single day, but I'm not going to count them. Anyway, besides the point. But look at the run up from there, 619 to here, 1251. Now that was 1, 2, 3, 4, 5, 6, 7. 7 weeks ago. That's 2 months ago. All right, so let's look at the last 30 days. Because the last 30 days will give me a better idea. Okay, this is going to give me a better idea of where I think it's going to be next. Well, it don't look too good. Anyway, 30 days ago, we're right here, just below 10. Then we drop down to below 9, and then we shoot up to 1350. Well, that's a nice run up. Okay, that's $4. $4.50 to be exact. Well, you might think $4.50 is not a lot. But what you're not keep in consideration, the stock was below 9. $4.50 on a $9 stock is a 50% increase in 1, 2, 3 weeks. 50% increase. 50% increase in 3 weeks. So don't you think they're going to take profits? And once they do, it starts coming down. Well, we have a lower low today, a higher high and a lower low. So that's kind of a little confusing. So is this the top right here today? And is it going to start going down? Because we had a 50% increase. So yeah, it would be great if you bought it 2 or 3 weeks ago. But now I'd put it down for about 2 or 3 weeks from today, which is what I'm going to do. 2 weeks from today. Only because I'm here every single week. I'm here every single day. So when I say I'm going to look at it in 2 weeks, in 2 weeks we'll be looking at it. Because you know what we're looking at today? We're looking at stuff that we saw 2 weeks ago that looks good. Okay? Because stocks do the same thing. They go down, they go up, and then they come back down again. So in about another 2 weeks, 1 week and about 2 weeks, hypothetically. That's always hypothetically. Am I right? No. Once in a while, I'm right. Those are the days I'm looking forward to. Because eventually it will come down, and eventually it will find a bottom, and eventually it will turn around. So if I look at it every week, every 2 weeks, hey, right there. Thank you. All right, so anyway, that's Riot. Next on the list, Dow Chemical. Yeah, so Riot is going to be a no only because it's starting to come down now, in my humble opinion, because it's a 50% increase here, and I don't want to be any part of that. Now, I wouldn't mind buying it here, okay, because I like 2 days of the upside. On the third day, I'd jump in. So that would be right about here, right at $10. And then she went up. But I want to jump out at 1%. So what's 1% of $10? It's only 10 cents. So if I jump in at $10 and the thing jumps up 10 cents, well, I'm out and I get my 1%. But that's basically how simple it is. All right, anyway, so that's Riot. I want to take a look at Dow Chemical now. DOW. When my son was little, I remember when he was little, he used to combine the words do it now, and he's like missing the other one. So it's always Dow, Dow, do it now. So that was his expression. Hey, Rocco. Because I'm making these videos for my kids, so I'm assuming when I'm gone someday, they'll have this to remember me by. So it is what it is. All right, so let's keep on keeping on. Next on the list is Dow. Now remember, it should take you 3 to 4 seconds to see everything you need to see in the first chart. Okay, high, low, where was it? Where is it? Look at the motion. Sideways, down, sideways. Actually, that's simple. Now, I could spend hours looking at each individual movement, you know, the double head and shoulders there, the declining pennant here, the incline. Yeah, I could look at all that crap, but no, it's supposed to be for a 9-year-old. Simple, high, right there, low. Where was it? Where's it? What's the direction? Down, sideways. That's simple. Stop making it more complicated than it needs to be. But once you get past that point, then we go up to the numbers. Current price, 28.25. I'll be looking at the 28.50s. It's elementary. What whole number on this list comes after 28.25? 28.50. It's not that difficult. 28.50 right there. 46 cents. Come on. That's more. 1% of 28.50 is 28. Well, 46 is a hell of a lot higher than 28. So, yeah, nice numbers. So now we go into the chart and we look a little closer. Okay, step 1 is create your list. Step 2, put it in the calendar. Step 3, pull up the chart. Step 4, check the numbers. Step 5, go back to the chart and zoom in and see if it's the right time. Just because the 1-year chart looks okay, just okay. I want to take a look at the 90-day chart, the 30-day chart. What does it look like it's doing next? Okay, so a year ago, 53.24. Looks like we got a triple high, 55. Once, twice, 3 times right there. So if it was worth more than 55 or 56, it would have been higher. But no, we, the buyers and the sellers, we decide this crap. We decide what's too high. We decide what's too low. And we usually base that off of news and some other weird stuff. So anyway, that's the high. The low, TDS day, right there. Second week of April. Okay, but look at the pattern. It looks very simple. Up, down, up, down, up, down, up, down. So it's coming down at the moment. I don't need to go in any deeper because already here's the bottom, here's the top. Now she's coming back down. What does she normally do? Down, up, down, up, down, up. Well, now it's coming down. So when it probably gets here to the 27 or 26 or somewhere in this area, then it'll be time to look at it again. So I'm putting down for next week. Not 2 weeks, because look at the distance between the high and the low. Well, look where it is now. It's a lot closer to the bottom. So 1 week, next week would be a good idea for Dow. So we're going to take a look at it again next week. Ooh, we got a nice list for next week. All right, so let's keep on keeping on. It's Ben Said. What's happening, Ben Said? Chase and Jack sold 30 contracts at $12.50. Cool beans, brother. Nice going. All right. Berry Sports Highlight. Yo, Laurie. Is he live or is it pre-recorded video? Laurie, it's pre-recorded video. I'm answering your question. Anyway. Do you buy stocks or are you working with a leverage derivatives? Oh, no, I do stocks and stock options. Luigi, what's happening? Cooked. Yeah, okay. What's up, James? Yeah. Pepsi, can you see if it's good to sell puts? Okay, Ricky, I'm going to take a look at Pepsi. Pepsi. Interesting. Take a look. The high, a low. Where was it? Where is it? Look at the motion. Up, down, up, down. Now she's going up. Okay. The bottom of the year. Now, we were watching this for the past couple of months, waiting to find this bottom. Well, it's finally here, right there. Looks like a couple of weeks ago. Now she's coming back up again. So, 135.57. The 135.57, the 136 is 259. Well, yeah, that's way in the money. So let's take a deeper look into the chart. A year ago, we're at 164. We jumped up to the high of the year at 181, and that was the beginning of August. It's only a couple of weeks away. Look at your last 30 days. I don't know. What do you think? Okay, here's the bottom right there. She jumped up. Now she's kind of going sideways. But look at this pullback right here. Okay, there's a little bit of a pullback here. Then you have 1, 2, 3 days to the upside. So yeah, if I was looking to buy something this morning and Pepsi was on my list, I would have jumped in. But it wasn't on my list this morning, which it should have been. I can't see everything, but that looks good. So let's do one on Pepsi. Let's do a covered call so you can see how it works. So let's do one on Pepsi right now. So 37.57, sorry, 35.57. So we're going to be looking at the 36s because that one looks the most promising. Okay, it's simple math. It's at 135.57. The closest strike price is the 136, and it's going for 259, which is more than 1%. So watch, just watch. Now, for those you don't know, the screen behind me is live on YouTube. Give you a chance to see these numbers a little bit better. Okay, and if you can do me a huge favor, I just got a notice from Instagram. If I don't have 1,000 followers on Instagram, they cut off my ability to go live, which is what it is. I've only been posting on Instagram for, I don't know, 2 or 3 years. Apparently nobody's interested in investing for cash flow. Anyway, let's go back to here. First thing I want to do is go to covered stock. Now, one thing I really like about Thinkorswim, the trading platform, is that click of a button, everything changes. And all I have to do is just fill in how many I want to buy or how many I want to sell. But these are all the different trading strategies. Single, vertical, back ratio, calendar, blah, 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 all those. But I'm going to this one here because it's the safest one right there. Safest for my 9-year-old little daughter. She's not 9 anymore. My goodness. 136. There it is right there. Okay? 136. Now, as you bring your cursor over the little tiny square right there will open up. It says buy. That's what I want to do. I want to buy that one. Okay, 136 right there. And it sets everything up for me. All I have to do is fill in how many do I want to buy. So I'm going to do just one contract so you see what the numbers look like. Whoops, because if I do, 10, 20, 30 contracts, it might be a little intimidating. So I like to keep things simple and safe for everyone. Now I'm changing it from a market order, from a limit order to a market order. And my reasoning, okay, I really honestly don't care what the stock opens up in the morning. I want to buy it first thing in the morning, and I want to sell the covered call first thing in the morning. Because when you're doing a covered call, the stock order and the option order are tied together, and it already has the profit already built in. So let's take a look at that order. So here it is. Buy one covered call of Pepsi, PEP, 100. That means it has weekly options. 18 July 25. Well, that means this option trade is expiring on this Friday. The 136 call option against Pepsi, the stock, at the market to open to open. Now, the reason it says to open, because we're doing 2 orders. We're buying the stock. It's going to open the order. We're selling the option, which is going to open that order too. So 2 separate orders. Think of it this way. You buy the stocks out of New York, you get the options out of Chicago. New York, Chicago, 2 orders. 2 carrier pigeons. 2 sets of smoke signals. However you want to look at it. All right, so how do I find out what my rate of return is? Well, for 100 shares, I'm paying $13,000. My profit's going to be $307 per contract. Each contract is going to get me $307. So what does that mean profit-wise? Well, let's find out. For that, we're going to need the calculator. Here we go, calculator. So to find out the mathematical equation for this is relatively simple. You take the profit, right here, see that? Max profit, 307. Put that in the calculator first. 307, all right? To find out the rate of return, you take the profit and you divide it by the cost of the trade, including commissions and fees, $13,293. Now, keep in mind, $13,293 comes to a grand total of 2.3%. Now, we all know that 1% a week is over 50% a year. 2.3%, well, that's over 100% a year. Can you imagine doubling your money once a year? That's cool. However, It's up to you to figure out what is comfortable for you. Can you afford 4 or 5 contracts? Can you afford 10 contracts? Can you afford 20? Can you afford 1? We're all different. We all have our own different paths. We're all going different directions. Fine. Well, it's a simple strategy. It's safe, it's predictable, it's consistent. So you got a couple of questions to ask yourself. Question number 1 should always be, does this make sense? Buying something, selling it for almost the exact same price, collecting an insurance premium against it that's equal to over 1% per week. And if it doesn't work this week, I can do it again next week. Because once you buy the stock, that's what you got to do first. You got to buy the stock first, then you sell the option against it. So once you buy the stock and you own it, it's yours until you decide to sell it. So rule number 2, never sell for less when you paid for it. So here's another way, think of it, okay? $13,293. Think of it as buying a Pepsi machine. Okay, buy a Pepsi machine, put it in a certain space, and that certain space gives you $300 this week. Well, what's it going to give me next week? Maybe it'll only give me $250 next week. Well, what about the week after that? Maybe it'll only give me $423. Who knows? Every week is going to be different. If you go buy a vending machine, you put it someplace, it's going to give you a different return every single week. This is almost the same thing. But here's the thing. I don't have to go fill the Pepsi machine. I don't have to empty up the coins. Okay? I just invest into what I call a cash producing asset. So if I buy Pepsi 100 shares, it's costing me $13,000. But that $13,000 investment, well, this week it's getting me 307. Well, what's it going to give me next week? Well, what's it going to give me next week is going to be directly correlated or directly related to what the stock is doing. If stock goes up, maybe I'll get more. If stock goes down, maybe I'll get less. It's the same thing. You buy a soda machine, wherever you put it, it's going to give you a certain amount. If you move it, well, maybe you'll get more. Maybe you'll get less. If you move it again, same thing. Almost the exact same thing. It's a cash producing asset. What's a Pepsi machine? It's a cash producing asset. What is a rental house? It is a cash producing asset. Anything that you can rent out and get a weekly return or a monthly return, either one, is a cash producing asset. So one thing I like about this, no employees, no overhead. I don't have any property taxes where I'm going to be. I have no electric. Well, I kind of do because I can turn the internet on. But you know what I mean. Okay? It's not like a brick and mortar business. But what it is an investment. So if I'm buying this soda machine, this Pepsi machine, and this Pepsi machine is giving me 2.3% per week, or what was it, 3, whatever it was. If it's giving me that every single week or close to that, I'm perfectly happy. How many other machines can I get? Could I get a Coca-Cola machine? K-O, Coca-Cola. Can I get a Snapple? I forget what that one is. What is Snapple's ticker symbol? I forget. Anyway, same thing. Cash producing asset giving me weekly cash flow. That's what I'm looking for. I just happen to be using stocks as a metaphor. Okay? So if you go out and buy a limousine, let's say you pay $100,000 for your limousine and you rent it out every single week, you're getting a cash flow from that asset. Next. Pepsi. All right. Oh, wait a minute. We got to figure out the rate of return. Did we already figure out the rate of return? Yes, we did. 2.3% for Pepsi. Well, 2.3% for 1 year is over 100%. It's 100% return. Can you imagine getting 100% return on all your investments? That would be awesome for the year. Okay, what do we have here? Ben. Laurie said, hi. Do you buy stocks or are you working? Okay, we asked that one. Pepsi. We already looked at Pepsi. Is he live or is it pre-recorded? That was Laurie said that. All right, Dow Chemical. We looked at Dow Chemical. 23 more questions. Let's go through. What do we have? Thank you for clarifying. You got that one. Oh, ticker BRO. Nayara. I'm going to say this as kindly as I possibly can. What the hell is that? BRO? I never heard of it. Well, let's take a look. BRO. BRO. Who the hell is BRO? BRO. Brown and Brown Incorporated. No. Quick, wasn't that? That was pretty damn quick. Hold that thought for a second. Laurie, so you buy 100 shares of Pepsi, sell a call option on the 100 shares for 300 bucks. That runs out in a week, right? What happens if the buyer uses the call option? Let me see. Okay, let me see if I can explain it to you this way. Okay, if I pay $13,000 for 100 shares, okay, then I get 2.3% return for the week. And then whoever bought that option buys the stock from me for the exact same price I just paid for it. So I get the 2.3%, I get all my money back. What part of that are you having a difficult time with? Because think about it. If I buy it for $13,000 and I make $300 on it this week, okay, and then at the end of the week, someone buys it back from me for the exact same amount I paid for it, and I still get to keep that 300 bucks, I'm not seeing the issue. It sounds almost perfect to me. I mean, I will buy a stock at Monday or Tuesday, get a nice rate of return on it, and get all my cash back at the end of the week. I got no problem with that at all. I'm not losing anything. What do you tell yourself to be calm in moments under certainty? This too shall pass. Or here's another good one. This too shall pass. That's one. Number two is, well, you know, I never seen a hearse go by with a U-Haul. Because whatever you make, whatever you lose, no matter whatever happens, you ain't taking it with you when you go. What happens when Pepsi stock lost value? Okay, Laurie, let me ask you a question, okay? If I buy an asset, a rental house, a Coke machine, a Pepsi machine, a limousine, anything that I rent out on a weekly or monthly basis, okay? 1 month to the next month to the next month to the next month. It's kind of like airline tickets and gas prices. It's going to change all the time, but guess what? You buy a gallon of gas at $2.93, and I buy a gallon of gas at $5.23. Is the gas itself going to take me from point A to point B? Well, the answer is yes. Is it going to give me what it is I'm looking for? The 1% a week. Okay, so the value goes down. Great. So this week I make 309. Next week I make 200. Next week I make 100. Whatever I make is what I make. Now, as long as the company's consistently profitable, such as Pepsi, okay, they've been in business for over 100 years. They are a dividend king, which means they've increased their profits for more than 5 decades. Why wouldn't I want to buy it? Because guess what? I can almost, I'd like to say guarantee that Pepsi is probably going to be making Pepsi next year and 10 years from now and maybe 20 years from now. Because they've been making it for over the last 100 years. So what makes you think just because I'm buying it that all of a sudden it's going to go bankrupt and not be around? I'm only buying 100, 200, 300 shares. I only have a small amount. So yeah, the price is going to go up, the price is going to go down. If you don't know what you're doing, if you don't know what you're playing, because yeah, you will buy a stock at 92 and it will jump up to 125. Just as on the other side, you will buy it for 125 and it will drop down to 102. They go up, they go down, but you know it never, ever, ever, ever changes? If I buy 100 shares today at 92 and the stock drops all the way down to 10, well, guess what? I still own 100 shares, which means I can still write a contract for the 100 shares that I own. But that part gets a little tricky because if the stock goes down and you sell an option down here and then it goes up, well, then you're kind of stuck down here. So you just got to keep pushing it forward, forward, forward. There's always ways out of it. But rule number 2 is never sell at a loss. Remember rule number 1, never buy something you don't want to hold on to until the day you die. So if you're not okay with the risks involved, and there are, okay, let me get a good one. 23 bucks is the high. The low, $6. If you're not ready for a 66% drop in something that you buy, you shouldn't be playing this game. But if I buy 100 shares at 22 and it drops down to 6. Well, I still own 100 shares, which means when they go paying the dividend every year and that dividend increases every year, hence the reason for 2 decades of increased dividends, okay? When that time comes, I'm still getting the exact same as everybody else. So if you bought at 6 and I bought at 22, okay, we both had the same amount of shares. We're both getting the exact same amount of dividends. I have 100 shares, you have 100 shares. If the dividend's 20 cents a share, well, you're getting 100 shares at 20 cents a share. I'm getting 100 at 20 cents a share. It's the exact same. Why do I care where the price is? Because this has nothing to do with the company itself. And I know a lot of people have a hard time accepting that. But think about it. The stock was at 22. It dropped down to 6. At what point did the CEO get on the phone and call all the employers, say, hey, our stock is dropping. Don't come in this week. We need to cut the fat and bet our stock's back up. No, they don't do that. They honestly really don't care what this is. People come in, they punch the time clocks, they work their 40 hours. This got nothing to do with it. This is just the investors' perception of what we think this is. Why? Because we want to collect the dividends. We want to collect the stock appreciation. Okay, so what is it you're looking for? Well, you know what I'm looking for. I'm looking for 1% per week, simply, safely, and predictably. So if the company consistently gives me what I'm looking for, regardless of where I get in, if I go in at 22, I still have some, and right now it's at 971. But the interesting thing, when it's down to 971, I'm selling not the 9s, not the 10s, but the 1050s or the 11s or whatever, because I want that consistent cash flow, even if it's getting a little lower than 1%, because there are other stocks that actually make up for it. So if I have 10 positions, not all 10 are giving me 1% or more. There might be 1 or 2 giving me 3%. And then it might be 1 or 2, kind of like Kohl's at this moment in time, giving me 0.25%. But if all in all, okay, if I have 100,000 in my account, well, if everything combined at the end of the week, I'm walking away with $1,000, that's 1%. If it's a $50,000 account, and at the end of the week, I'm walking away with $500, well, I made it. Okay. Question over here. Florida Sun Mom. If it goes down too much, the option is not there for the price you bought it for. What do you do then? I just literally finished that answering that. I guess you answered my question. If you bought it at 22, drops to 6, then how do you do a weekly option contract? Okay, I got it. Hold on. I get it now. You just roll it down and it gets to 10. Exactly. So I've actually owned Kohl's. The longest I've ever held anything was 9 months, and that was Kimberly-Clark. Okay? But this year, Kohl's I've had for over a year. I bought it a year ago. I bought it up at the $22 area. Okay? And it slowly dropped. But guess what? I can go, as a matter of fact, let's do it. Let's do it so you guys can see. All right, let's go here. Let's go here, and let's go Kohl's, and let's go all the way back to January. Whoops, yep, there we go. All right, and trade history, give it a minute to reset. There it is. Okay, let's get this out of here. Oops, get this out of here. Okay, so this is 1 year of trading just Kohl's. Okay, see, Kohl's. See the dates? 7/7, 6/3, 5/5, 5/15, 4/28, 4/21, 4/14, 4/7, 4/2, 4/1. 325, 324, 314, 226, 228, 221, 23, 127, 116, all the way down to, what is that? December last year. But every single one of these trades is a weekly trade that I traded with the Kohl's that I had. Why the hell would I get rid of it if it's consistently giving me money every single week? It's really not that difficult. So if it goes up too far, too fast, well, I then count all the money that I've collected from it, Am I winning or am I losing? Well, let's come down and take a look at Coles. Coles. Right there. Interesting. So it is what it is. I trade it every single week, and it consistently gives me a nice return. All right. That being said, let's keep on keeping on. I get it now. Yep, she got it. When the stock drops down, we already did that one. The buyer of the call option calls. Yeah, well, if they take it away from me, fine. Did I make a profit? Okay, Laurie, what I'm looking for is, what did I buy it for? What did I sell it for? How many premiums did I collect? How many dividends did I collect? If I sell it now, what does that mean? How much am I making? How much am I losing? Where am I on that scale? There's always going to be a balance somewhere. All right, BRO, we did that one. No, XRP, Jessica Jones. XRP is not a dividend stock. Meyer, we already did that one. Thank you. That's awesome. Mr. Cayley, all righty. Kevin, I had to sell today to make some home repairs, but I definitely learned a lot. All righty, makes sense. Capital gains eat away at that. Well, let me think, Mario. If I'm making 50% per year and I'm worried about my capital gains, I'm thinking I need to talk to a tax strategist or a tax planner to learn how to offset some of my profits so I don't get large tax bill. Now, I don't want to get into taxes because that's a whole long conversation. And you're here on TikTok. I would seriously suggest you go and you listen to some of the content that some of your brothers and sisters are posting online about taxes. Okay? So I don't want to get into that because the powers that be that are watching and listening, they don't like it when we tell you stuff that they don't want you to know. Okay, Jay with Lime. I'm going to tell you the same thing. If you're worried about taxes, you really need to talk to a tax strategist or tax planner. There's a reason why Warren Buffett pays less taxes than his secretary. There's a reason why President Trump pays almost no income taxes. There are reasons why people don't pay taxes. You need to ask more questions. A limo is depreciated as, yeah, I get it, but you know what I mean. Okay. Where was it? Okay. Yeah, Nayara. Yep, a limo is a depreciating asset. I understand the difference that it's a depreciating asset, but also it's a cash producing asset depending on the purpose of what you buy it for. So if I'm buying a limousine just to give people rides in it, well, the money that I collect from the rides that I give, well, that's income coming in. The depreciation of the asset, well, that's offsets some of the profits, but it's still the same thing. Mario, you meant short gain tax. Yeah, I understand what you're saying. You still need to talk to a tax strategist. Tadil, I'm having a hard time finding a good trade this week. Any suggestions? I know it's not your advice. My advice would be join us on the morning trading group. You'll know exactly what it is I'm doing. That would be my advice. Tadil, you've been here long enough. You've seen what I do. Nayara Insurance, yep. It's basically what it is. It's insurance policy. AMD, look at this. Cool Arrow wants to take a look at AMD. Advanced Micro Devices, I can tell you no right away, but 3M, ooh, I like 3M. Oh, no to 3M. Okay, where will the price of gold go? Red Whack, I have no clue. I don't do gold. How much does the order for buying of stock cost? It depends on which trading platform you use or what broker you use. Some pay certain amounts, some pay certain amounts. So they're all different. So Cool Arrow, 3M. Let's take a look at 3M. 3M is going to be a no. Now, the reason being, okay, the highs here, the lows here. A year ago, look at the movement, up, down, up, down, up. Okay, right now it's at the high of the year, right? I don't buy at the high of the year, so there's no sense even looking at the numbers. So that's an automatic no. Next, ALB, Abelmo. Okay, I actually have some able mile. High, low is, look at the motion. Down, up, down, up. Simple, right? It looks like on a 1-year chart, looks like it's a time to buy. But if you look at the 30-day chart, zoom in, okay, down, up, no, it's not the right time to buy on a 30-day chart. What's your hedge risk approach? Unsolicited nick picks. Wow. Now, that's an interesting question. So you're asking a question as if I understand exactly what it is you're looking for. What numbers are you looking at? See, I'm looking at it from the perspective of a 9-year-old because that's what it was created for. Follow the bouncing ball. Up, down, up, down, up, down. Yeah, that's what it usually does. Okay, what am I paying for it? 787. The closest one's going to be the 72. The 72 is going for 155. That's over 2%. So do I like the company? Yes, I do. Is it the right time to buy? No, not really. Unless I want to buy it for the long term. Because on the 1-year chart, it makes it like it looks sense to buy it now. The high's here at 115. Here's the bottom. Now it's bouncing up. So on the 1-year chart, yeah, it makes sense to buy it now. But on the 30-day chart, if I just want to do it for the weekly basis, well, it's a definite no. Because your bottom is here, it jumps up, now it's coming back down again on the 30-day chart. So what are you investing for? Are you investing for annual returns? If so, it's the right time to buy. If you're looking for quarterly returns, maybe, maybe not. But I'm doing weekly. That's every 5 days. So the way it looks to me, the next 5 days, this thing should be coming down because it went from 56 to 76. Now, 56 to 76, that's 20 bucks. Now, 20 bucks on a $56 stock, well, that's 10, 20, 30, 40%, something like that. That's a big number. So yeah, from here to here in just 1, 2, 3 weeks, yeah, 3 weeks it jumps up over 20%. Yeah, it's gonna be profit taking. Profit taking means the stock comes down. When the stocks come down, I'm saying about 2 weeks for Able Mile. I'm gonna write it in my book, 2 weeks from today, because it's not a good time to buy today. But in 2 weeks, it's gonna have a whole total different picture. So Able Mile in 2 weeks. La 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 la. Okay, the 100 Pepsi stock for $13,000. For example, how much would that order cost? 13,000. Oh, okay. Hold on a second. She wanted to know what that order costs. Pepsi. Covered call. Oops, let's get rid of this. One contract. Are you ready for this? It's going to cost 65 cents plus 1 cent. That's what that order is going to cost. Okay? So it's going to cost you $13,293.66. That's how much you're paying for that 100 shares of Pepsi. Well, the commission is 65 cents plus 1 cent. So that's 66 cents. That's all you're paying for the commissions on that particular trade. Dividend stock talk, full screen, down on YouTube tonight. Oh, damn it. Oh, yeah, I didn't press the damn button. Let's try that again. Okay, let's do that. I'm sitting here right in front of me, and I'm looking at it, and it wasn't lit up, so I forgot to hit the button. So sometimes I hit the wrong button. Sometimes I forget to even hit the button. That's weird. It's a joke for some of you guys just getting started. The joke is, it's like, where do most people lose money? They lose money by hitting the wrong button. As silly as that sounds, as juvenile as it sounds, it happens. It happens more than people want to admit it. I hit the wrong button all the time, and I've been doing this for almost 30 years. So, unsolicited nick picks. You got to explain a little bit more depth. What do you mean? What's your hedge risk approach? Explain that a little bit better. Jonathan, which broker to invest in? I'm Brazilian and I want to buy stocks. I use Think or Swim, which is through Charles Schwab. I really honestly couldn't tell you what to do, you being in Brazil. All right, hold on. Rich Bruner finally recovered from TDS sell-off. You know what that is. Hey, I'm coming to Vegas in a couple of weeks. Remember you said your wife will let me use her brand new Porsche? Anyway, can we look at QQQ? The world is a beautiful place. Wants to look at QQQ. All righty. Now, I personally don't like QQQ. Hell no. Take a look. What do you think? Okay, a year ago at 500, drops down to 400 as a bottom. Now it's at 556. No, because time to buy it was a couple of months ago when it had this big drop right at TDS day. Okay, there's TDS day right there. That's when you should have jumped in for that nice long ride. Energy transfer. Terribly sorry, Kakaram. I don't do energy transfer, and I'll tell you why. Okay. Let's change this to this. Right here, look at the premiums. It's at 17.49 to 17.50 is going for 15 cents, which is less than 1%. But the next one out is going for 3 cents. Then the next one out, 1 cent. Now, I don't like it because the options aren't really that great. Now, I used to trade energy transfer years ago until they changed market makers, apparently. So we have ETFs. Okay, hold on. Steve, hit another bottom. Okay, I'm Brazilian. Hit another bottom. Your setup is what is now showing on the tube. Okay. Mark, is the Zoom open? It says you didn't start. Wait, does it say that? No, it's open. Nobody's there at the moment. It's kind of weird. Let's start it again. No. 9:30 p.m. Let's start it again. Starting it again. If you got the link. There, connecting. And start video. And there we go. Okay, no, the Zoom is open. If you have the link, you can go on over there. Jesus, never sell a loser. Dude, you got them. Got them. I have no idea what that means. You got them. Got them, get them, got them. I have no idea. Got them. Okay. The ants, colloquially known as picking up pennies in front of your freight train. Oh, cool. How did you perform the first weeks of April? First weeks of April. Well, let's go check it out. Hold that thought. First weeks of April. That would be second week of the second quarter. All right. Let's go right there. Here we go. Hold that thought, because I do share all my trades publicly so you can see exactly what I did for the first couple of weeks of April. Okay, weekly trades 2025. Here we go. May, last week in April, second last week in April, third week in April, second week in April, first week in April. Alrighty, dude, you ready? First week in April, account number 1, 3.01. Account number 2, 2.46. Account number 3, 2.7. That is week number 14 of the year, week number 1, second quarter, March 31st to April 4th. Okay, so week 15 of the year, week 2, second quarter, April 7th to April 11th. Account 1, 2.7. Account 2, 3.3. Account 3, 1.8. Week number 16, week 3, second quarter, April 14th through the 18th. First, account 1, 3.9. Account 2, 1.7. Account 3, 1.4. Week 17, fourth week of the quarter, April 21st, April 25th. 2. Come on. 2.74, 1.92. Oh, 0.65. I didn't make 1% that week, but that's the end of the week. That's the end of the month. I'm not quite sure if that satisfies your curiosity, but every single trade I do is available online. Here's the timestamps. Okay? Here's this whatever the hell it's called. Calendar, covered, single, calendar, single, blah, blah, blah. The quantity, the stock symbol, the dates, the strike prices, the prices, and the profits. They're all there. You can do the math yourself. So 1 week, I missed my 1%. So wait a minute, that's 4 times 3, 12. So I got 12 times over 1% and 1 time under 1%. See, I don't get 1% every week. I just average over 1% per week. All right, anyway, I think I'm doing rather well. Nothing to complain about. Okay, back to where we were. So I hope that answers your question. Unsolicited nitpickers. What's your math? How are your premiums collected versus the share prices devalue? Oh my goodness. See, you're taking a look at the big picture. I'm taking a look at the small picture. Look at it this way. If I buy IBM at $100, okay, and let's say she drops to 80, 70, 60, 50, I still have X amount of shares. Okay, so if I buy 1,000 shares at $100, okay, I get 1,000 shares, which means I get 1,000 times what the premium is. So if the premium is 15, I get 15 cents times 1,000. What is that, $1,500? Okay, fine. Now, if the stock drops to whatever it drops, and I sell a premium and I collect 15 cents per share of that 1,000 shares, I'm still collecting 1,000 shares times 15, which is still $1,500. So the price does not really matter. It's what you're selling the premium at what price. So if I bought it here at $21.50 and now it's worth 17, well, I can sell the 18s, I can sell the 15, I can sell whatever I want. And every day I'll take a look at what is the break-even price. What did I buy it for? What did I sell it for? What is the premium now? Does it make sense to let it go, take my profits, or does it make sense to roll it into next week? Okay, it's always going to be a math problem. I have two priorities that I'm looking for: consistency of profitability and weekly option. Wait a minute, sorry, consistency of profitability and preservation of my capital. I'm 61. I do not have the privilege of being wrong, which means I have to be safe, predictable, consistent. All right, that's what I'm looking for. So I've been doing it for a very long time. So if you want to have a conversation, drop me your number. I'll give you a call and we'll chat. You being negative here doesn't really help anyone. Ask why, what, and how. Don't be saying negative stuff. That does nothing but bring negativity to you, because really, I don't care what your opinion is. If you have something good to say something good. You have something bad to say, well, keep it to yourself. Alrighty. Naya, you only asked what BRO is, and I think it is a dividend stock. Okay. Sorry, I thought you were missing my comments. No, I wasn't. It's just Nayara, I think it is. I have 6 different channels going, which means I got 6 sets of conversations. So if I don't get to your conversation right away, I apologize, because I have other conversations going on. All right, so what do we have over here? What's my opinion on YPF? What the hell is YPF? It's kind of like my opinion, isn't it? Oh, wait a minute. Is that a yield max stock? YPF? YPF. What the hell is that? It's a no is what it is. I don't do monthlies. 18 July, 15 August, 17 October, 21 November. Think of it this way, okay? You can do these trades once a month because it's a monthly. Do it once a month. So if I'm getting 1 to 2% with each option trade I do, that's 12 to 24% a year. Now, some of you might like 12 to 24% a year. But if I'm getting 1 to 2% weekly, that's 50 to 100% a year. Yeah, I realize it's, 5-10 minutes every single day. Well, I'm terribly sorry. It's not a press button, boom, you're good. No, you got to invest some time into this. Okay, most people spend more time planning a family barbecue than they do their personal finances. If you can't take care of your personal finances, you probably can't take care of a dog or a plant or a flower or your lawn. It's your money. You do what you want. Okay. I look at my money 5 or 10 minutes every single day because I'm retired. That's where my money comes from. So it's kind of like my fish. I got a fish tank. I feed my fish once or twice a day and I clean their glass. So what do I do with my money? Well, I look at it once a day. What is it doing? What did I buy it for? What did I sell? Where is it at now? What does that mean? Am I safe? How can I be safe? What do I need to do to be safe and to be consistently profitable? That's it. I'm here every single night. You guys ask any questions you want. But if you don't have something nice to say, don't say anything at all. Airing out your dirty laundry, what makes you unhappy, doesn't help out any of us. All right. Sorry, I thought I was missing a comment. Nope. Sorry, I'm not retired. Uh-oh, I missed that one. Chidio, sorry, I'm not retired. How to take part in the morning groups. I get it. Thanks anyway. Abel Mal is a hard no. Yeah, but it's a possibility for next week or the week after. Mo, didn't we already do Verizon already? I think we did. VZ. Yeah. Now, Verizon, although it's a no for now, look at where it is. It's at a low, which means if you really like Verizon, great. Well, pay attention because it looks as if the drop is slowing. Okay. Thursday was low, Friday was lower, but look at the distance between the big drop here and the drop is slowing down. So eventually it looks like it's going to do this thing right here, come down and then turn around and go back up. Well, that's exactly what it looks like it's going to do probably this week if you really like Verizon. Unsolicited nitpicks. Able Mile is a chemical company. They're hosed. All right, I'm going to assume that you don't like that. All righty. Buy the dip. Get rich quick. No such thing as getting rich quick, kiddo. Can live partnership arise? I have no idea what you mean by that, Jonathan. Can you automate the buy-in after the position get closed when the call option gets activated? In a case, from what you're saying, Laurie, they have what's called alerts, which you can create an alert when this happens. If the stock drops to this point, send me an alert. If stock gets to this point, send me an alert. It goes right to your phone and you just take a look at it and then, to take advantage of it, to take care of it. Okay, they already have that built in, well, into most trading platforms. You can set an alert. So yeah, you could, just got to figure out how you want to do that. Is the strategy only or most effective if you buy on a Monday or Tuesday or even later in the week? No, Brian, it's not. Okay. Now, I use it on Monday morning because from Monday morning, as soon as the market opens, to Friday afternoon when the market closes, that is the maximum amount of weekly time you're ever going to get. Okay, they open up at 9:30. Well, you can't get in before 9:30. They close at 4. You can't stay after 4. So that's the maximum amount of time there is. What are you doing? So, yeah, but you don't have to. Many times I bought on a Tuesday, Wednesday, or Thursday. Well, then you take a look at not this week's option, but you can take a look at next week's options because there's an option every 7 days, which gives you a lot of freedom every day or every week. Okay, what's the process you work through to decide to roll it or let it go? It's a numbers game. What did I buy it for? What strike price did I sell? Where's it at now? Where does it look like it's going? You got to take all those questions into account when you make your decision. Because like the great John F. Kennedy once said, we cannot answer the questions of tomorrow with the knowledge we possess today, which means I can't tell you what we're going to do on a Friday until Friday gets here, because stocks go up, they go down, they go up, they go down. So do the options. But what never changes is, what did I buy it for? What strike price did I sell? What did I bring in? Where's it going now? What do I do next? It's all by the numbers. A plus B equals C. 1, 2, 3, A, B, C. It's easy as doing. Laurie, not what I mean. Sorry, I'm native German. So English is my second language. Let me try again. All right, Laurie. What else we have here? When do you cut your losses? Seems like you don't. Well, unsolicited nitpicks. If I own 100 shares of a company that is giving me some income, I get a choice. Do I take, I haven't used my cow analogy in a long time. You ready? Here we go. Here's my cow analogy. If I buy a cow and that cow gives me a gallon of milk every single day or every single week, I'm happy as a clam. What happens if I go out and that cow gives me less than a gallon of milk? Do I get rid of my cow? Nope. I just deal with it. What if the next week comes around? Now the cow's only giving me half a gallon of milk. Do I get rid of it and sell it for a loss? Nope. As long as I'm getting something. Because all stocks do is they go up, they go down, and guess what happens then? Then they go up again. And then, would you believe they go down after that? That's all they do. They go up, they go down, they go up, they go down. That's it, that's all. They do not come to your house, make the bed, put the little candies on your pillows, tuck you in at night. No, they go up, they go down, that's it. If you're expecting anything else other than down, up, down, up, down, up, down, up, this is not the game for you to be playing in. That's all they do, up, down, up, down. What goes up must come down. Spinning wheels got to go round. Stop all your troubles by the riverside. Right up. World is a beautiful place. Thank you, thank you, thank you. Nevo. Jose wants to take a look at Nevo. What the hell is Nevo? N-E-V-O. Just with that, you should probably know what the hell is it. It's not popping up. We cannot find that symbol. Now, I did not create this. This belongs to Charles Schwab. So if Charles Schwab can't find N-E-V-O, well, then more than likely it doesn't exist. But it kind of does. Nevo Energy Incorporated. It's an OTC. Yeah, it's not available on the open market. What date is TDS? Somebody want to tell her what TDS day is? No problem, George. I have been watching your podcast and I am learning a ton. Thanks. Not a robot. Cool beans. What's the process you work through in order to decide to roll? Okay, I already answered that question. How long did it take you to feel confident to buy, say, 10,000 on stock and immediately sell a call? Oh, now that's the good question. Now, what I always tell people when you're first starting, never, ever, ever put money into it until you perfect paper trading. Okay, there are a lot of platforms out there that will let you play Monopoly with the stocks. You played Monopoly before, 4 greenhouses, 1 red hotel. Same thing. You use Monopoly money, paper money. You actually go to Google and say, paper money trading, stock trading, or virtual stock trading. It's pretend money. Don't put real money in until you understand what it is you're doing, until you're successful with the Monopoly game. Okay? There's a lot of them out there. Think or swim. This has a virtual, wait, let me pull this up. Right there. Okay. See? Live account, paper trading account, live account, live account. This paper trading account, I've had that for over 20 years. Okay? I still, to this day, paper trade because I'm always coming up with new cool ideas. Okay, the trading group, we take a look at stocks and we want to see, well, if we do this, what is that going to look like? Well, we do that so we're not risking anything. And if it works, great. We will implement it when it suits the right, when Moon is aligned with Pluto on the Sagittarius side with the dark sun rising on the monkeys. I have no idea. The stocks go up, stocks go down. When it's the right time to do a trade, if everything, yeah, that's what we do. But for the most part, we basically stick to covered calls on dividend stocks. But don't put real money into it until and you'll know when you're ready. Be nagging voice in the back of your head. You're ready, you're ready, you're ready, you're ready, you're ready. Until then, don't do it. Don't ever do something you're not 100% certain of. Okay, at some point. Okay, this is very important. At some point when you retire, all the money you accumulated over your lifetime, you got two choices and only two. And don't let anyone kid you other than the fact that you have two, and that's it. Heads, tails, light, dark, hot, cold, hard, soft, two choices, that's it. Do it yourself, take responsibility for your own money, or give it to someone else to do it for you. That's it. You have no other choices. All that money you've accumulated, it's in your 401k, great. Well, there's someone else taking care of it, and it's not you. Okay? Anyway, let's keep on progressing. Progressing forward. The stock you sold, the call option, or did go up. So the buyer then called the option, did call away, and you buy the stock again and sell a new call. That must happen often. Can you automate that? Yeah, you can. But think about it this way. Okay? How many Terminator movies have you seen? Have you seen a 2001 Space Odyssey? Have you ever seen in the long run where giving control to a computer is a good thing? Okay? I've seen a lot of movies. Giving control of my stuff to a computer, I've never seen it come out on the good side. It's great until it's not. So I take responsibility for my own. Yes, you can do that if that's what you want to do. They have a lot of AI trading bots if that's what you want to do. Terribly sorry, I'm old school. Nobody has more interest in my money than me, and I'm not going to give my money to a computer to do it for me. Let's keep on going. The Zoom says you're in another meeting. Does it really? Let's try that again. That's probably why nobody's there. End. Okay, so hold tight. Let's see if I can do this one more time. Zoom. Okay. There it is right there, the 9 p.m. meeting right there. Okay. Copy the invitations. There we go. Let's go. We didn't get the mail. Okay, hold on. Let's. You guys don't need you don't need to see me sign into this and do this. All right. All righty. Okay. Link sent to that group. There's like so many freaking groups, it's a pain in the butt. That group. Okay. You got two more groups. Just sit tight. I'll be right there. You can probably tell that technology is not my strong suit. I got one more list. There it is. And click, 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 and off to the races you go. All bloody righty. There we go. All right, so that's there. Now let's bring this back over to here. And there we go. All righty, so we don't need to see that. Let's get this out of there. All right, so hopefully I just resent the link for the Zoom. Let's start that one over again. It turned off on me. Imagine that. I guess that happens when you get out of the... Okay, there's that. Okay, and start. And start. And video. There we go. Now it's up and running. So hopefully that fixed that problem for those of you guys that are on Zoom that can interact. All righty. Paris, what's happening? Fitz there, what's going on? Okay, I get that concept, but I'm not interested in owning 1,000 shares of Radio Shack. Why the hell would you be buying Radio Shack? And when have I ever suggested taking a look at Radio Shack? But I get what you're saying. If you don't want to buy, see, that's rule number one. Okay, rule number one is never buy something you don't want to own long term. How did the underlying stocks perform? How did the underlying stocks perform? Well, here's the thing. When I have a cash producing asset and the cash producing asset gives me X amount of dollars on a weekly basis, seriously, I don't want to be disrespectful, but seriously, if I have 100,000 in my account and I make $1,000 or $2,000 every single week, whether the stocks go up or down is totally irrelevant. Am I getting my 1% to 2% every single week? Well, if I'm getting my 1% or 2% every single week, why do I really care what the performance of the stocks are? I have no intention whatsoever at ever selling at a loss. I thought I made myself clear about that with rule number 2. Rule number 1, never buy something you don't want to hold on to. Rule number 2, never sell at a loss. So if I buy AT&T at 29 bucks and it drops down to 18, I honestly really don't care, and I don't know why it is you're having a hard time grasping onto that. Because I know AT&T has been in business for over 100 years. They're probably going to be in business long after I'm dead and gone. I'll pass those shares along to my kids, and I'll give them the same speeches I'm giving you right now. I honestly don't care where the price is. If they're consistently profitable, if their dividends consistently increase, well, great. There's a weekly option that I can sell against it to bring in some cash flow other than just the dividends. It all depends on what your outcome is. My outcome is a simple, safe, predictable, consistent 1% per week. Well, I've been doing it for the last 15 years, and yes, I do have a whole bunch of, I got like 1,100 videos on YouTube. You can go look for yourself. It's consistently boring as hell. The same stocks over and over and over again. You can go look at some of my videos from 10 to 15 years ago. You will see them buying the same stocks now that I did 10, 15 years ago. Well, if it ain't broke, don't fix it. If it's working fine, leave it alone. I honestly don't care, and I don't know why you don't grasp this. I don't care what the underlying stock is doing, as long as they're consistently profitable year after year, and they have weekly options. Well, AT&T has been along for a very long time. Okay, Home Depot, Lowe's, Clorox, Colgate-Palmolive, JP Morgan, Morgan Stanley, Bank of America. Okay, I can rattle off a whole bunch of names that have been in business consistently for more than a quarter of a century. Well, those are the ones that I want. I honestly don't. All right, never mind. I'm not even going to bother anymore. All right, what do we got? Big Shark. All righty. Boring. Thank you, Big Shark. You ain't got something nice to say? Don't say anything at all. That works for me. Okay, so you getting the concept, Laurie? You're wasting a lot of our time. Thank you, Laurie. You might want to learn. Oh boy. You might want to learn calls. Calls is the right to buy a stock at a certain price at a certain date. That's basically what it is. And what makes up, I'm not even going to bother with you anymore. That's probably what you're looking for. High risk. Yep, it's not what I'm looking for. I want simplicity, safety, and consistency. Nirvana. Cannot imagine the amount of work needed to go to provide for each of those trades you showed. No, it's actually relatively simple. It takes less than 5 to 10 minutes every single day. You're forgetting. I don't know why. Every once in a while, I got to keep reminding people. You're forgetting this was created for a 9-year-old. Simple, safe, predictable, consistent, no way for her to lose. Okay, I don't see what you don't understand about that. That's the way it was created. Third Friday. That's for monthly options, Lily. And how are you doing this, Miss Lily? Having a nice day? Evening, James. How were your trades today? Pick up anything good? You got some Verizon? I didn't get any Verizon. I forget what I got. Oh, yeah, I got my list right here. Right there's my list that I got today. Do you ever exit early? Kevo, it's always about the number. Kevin, this is about the 3rd or 4th or 5th time you've asked me a question. I'm giving you the exact same answer. Okay? You've asked me several different questions, but the funny thing is, they always come back to the same answer. Okay? did I ever exit early? It's always going to be about the numbers. What did I buy it for? What option did I sell? What premium did I collect? Where's it at now? What does that mean? Okay? Keep up the good work. Thank you, Nicholas. The 9-year-old is no longer trading account for you. Yeah, I'm well of that, Mike, because she's not 9 years old anymore. Okay, she's 26. She's going to be, holy shit, she's going to be 27 in a couple of days. Yikes. Okay, thanks for reminding me how old I am. All right, so let's keep on going. What else do we have? Oh, no, we're done with those questions. We're done with these questions. We didn't get the email. Yeah, I just sent it out again. So I'm caught up with all the questions. Cool beans. Epic Games just stopped. Cool beans. Fitzair, how you doing? And how are you doing, Paris? Cool beans. All right, so let's look at something else. All right, so I'm going to look at one of the stocks that I bought this morning. Kinder Morgan, KMI. Look at that. Kinder Morgan, the high, the low. Where was it? Where is it? Look at this. Up, down, up. What's going on here? 28.32. I'll be looking at the 28s. The 28s are going for 63. Well, that's more than 1%. It's more than 2%. Let's see what it looks like. Okay. So a year ago, we're at the bottom, 1973. The high of the year is 31.45, and that was towards the tail end of January. Okay? Oh, and here's TDS day right here. TDS day right there. She shoots up, pulls back, shoots up, pulls back. Look at this. 2 days to the upside right there. Let me zoom in a little bit closer so you see the last 30 days. Because the last 30 days will give me a good idea of where I think it's going next. And you should be able to see it also. High, low, where was it? Where is it? Look at the motion. Down, up, down, up. Where do you think it's going next? There's no guarantee that it's going up, but it looks like it is because there was a low here at 27.20 30 days ago. And then from 27.20, it jumped up $2.40. Well, $2.40 on a $27 stock is right around 10%, maybe 9.5%, something like that. So like a 9.5% uptick. Okay, profit taken. There you go. It drops. Now it's right here again, close to that bottom. So now she's bouncing back up again. Well, what did you expect it to do? She jumped up almost 10%, profit taking. And when we're done profiting, see, stocks go down until they don't. And then stocks go up until they stop. It is so simple, a 9-year-old can understand it. Heck, my 5-year-old grandson say, hey, buddy, where's the high? Oh, right there, Papa G. Oh, where's the bottom? Oh, right there, Papa G. He's 5 years old. He can point it out. What direction do you think it's going? Oh, it's going up. Where's it going now? Oh, it's going down. Why do adults want to make things complicated? It boggles my mind where adults, supposedly in charge of society nowadays, questions whether or not up, down, up, down, up, down. Come on, it's simple. Up, down, that's all they do. Can you say it with me? Follow the bouncing ball. Up, down, up, down. All right, anyway. So let's take a look at Kinder Morgan at 28. Let's get rid of that. Let's get rid of this. Let's go to covered call, the 28 right there. See, right there. 28, right there. So 28, there it is. One contract, la, 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 at the market, because I like buying at the market because it's first thing in the morning, it fills. 931, I own it, I sold it, I already made my profit. Well, remember I said simple, safe, predictable. Remember that word? Predictable. Well, before I even do the trade, I know exactly what I'm making. A rough idea. Okay, a rough idea. $34.50 per contract. It's not a lot, but what am I investing? I'm investing $2,700. Well, okay, but what does that mean? What is my rate of return? Well, let's take a look at it. Get my calculator. You take the profit, $34.50, $34.50, whoops, 50, and we're going to divide it by the investment or the cost of the trade, including permit commissions and fees, $27.66. So divided by $27.66, and it gives me a grand total of 1.2%. Well, what am I looking for? I'm looking for 1%. So here is the conundrum. Okay? You got a couple questions you need to ask yourself. very first question is, does it make sense? That's the very first question you should be asking yourself. Does it make sense? If I buy Kinder Morgan at the current price, $28.32, and I sell it, or I sell the right, let me be more politically correct, I sell a covered call, which is the right to buy it from me at a certain price, $28.50, by a certain date, the 18th of July, which just so happens to be this coming Friday. So there's 4 days left for this option trade. What am I making on it? I'm making 1.2%. Does it make sense? That's question number one. Question number two, obviously, is, do I even like Kinder Morgan? Do I know who they are? Do I know what they do? Is this something I want to buy? Question number three, well, do I like Kinder Morgan at this current price? Question number four, am I willing to buy it, never sell it at a loss, and sell a covered call every single week until it hits my target price, and then I'll decide whether I want to get out or not? Well, what's my target price? Well, if I'm buying it at $28.32 and I'm selling someone the right to buy it from me at $28.50, that's my target price. How far away is that? It's not that far. It could make it this week. It could make it next week. It could make it the week after. It may never make it. You got to keep that in mind. It may never hit $28.50. And you have to be okay with that if this is the game you want to play. But think about it. Kinder Morgan, they've been in business for almost 100 years. They are a dividend king. They have increased their dividends for more than 5 decades. So even if the stock drops, well, what's happened in the last 50 years? A lot of crap has happened in the last 50 years. And this company still continuously increased their dividends every single year. So do I really care if it drops? No, I honestly don't, because they're consistently profitable and they have weekly options. If the stock drops, I'm going to lower my strike price, but I'm going to continuously bring in cash flow. Sorry, my rules, my game, my rules. It was created for a 9-year-old. If you don't understand it, you might not want to play this game. Let's keep on keeping on. That was Kinder Morgan, 1%, something like that. DKG, what's happening? I can't imagine the amount. Okay, no, not even. I already did that question. Drazik, what's happening, brother? We got about another half hour to go. Nice to see you. Kevo, do you ever exit early? Yes, we already did that question. DK, yeah, I already talked about that. I did not do Verizon this morning. Kivo, would you ever adjust your strike price based on the amount of stock may run up to give you more gain? Kivo, great question. You're not the first one to ask it. Okay, I get that question at least once every 2 weeks. Okay, do I adjust my strike price in accordance to the movement of the stock? Well, meaning if the stock jumps up, do I exit my option to be able to get more on the stock? Well, it doesn't work that way, because as the stocks go up, the option goes up also. Okay? Now, the interesting thing is they have what is called a delta, which is a Greek word for one of the option attributes. Okay? The delta basically means for each dollar the stock moves up, the option moves up in that value. Okay? So let me give you a quick example. Oh, it's right here, so it might be easier. All right? So the stock is currently at $28.43. The option, $28.50, is at 37. Okay? But here's the delta. Now this is important. The delta is 45. What does that mean? Briefly, simply, okay? If the stock goes up to $29.42, it goes up $1. So it's right now it's at $28.42. So if it goes to $29.42, the option right here, the $28.50, the 37, well, it's going to go up 45 cents for each dollar the stock moves. So now 37 is going to be 82. That's more than 100% increase. Okay, so if the stock goes up $1, this option right here is going to more than double in price. So if the stock goes up and you're thinking of getting out, yeah, you got to buy that back. Yeah, no, it's always going to be about the numbers. Always, always, always. If the stock goes up, we'll take a look at the option. How much did that move? Does it make sense to try to exit the trade? It either makes sense or it doesn't. Or roll it into another week. Buy back that one, sell another one. Because as yours increases, well, the other one, the next week is going to increase also. Because all options move as the stocks move. So it's always going to be a numbers game. What did I buy it for? What strike price did I sell? What did I collect? What's it at now? What does that mean? They're not that difficult questions. Christopher Lloyd, hey, 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 what's up, brother? Felix, hey, James, is AES on the list? Let's check it out, AES. Let's get rid of Kinder Morgan. AES, tra-la-la. Ooh, take a look at that. What the heck is AES Corporation? It doesn't sound familiar. So I don't know what the option prices is, but I wouldn't do it only because take a look at these option prices right here. Let me get over this side so you can see them better. Okay, if I'm right, 12.59, I do the 12.50s, pick up 24. That's almost 2%, almost. Okay, but the 13s are going for 10 cents. The 13.50s are going for 0. So I have to be right on a stock like this. Because whenever you see that, quickly going to 0, two strikes out, yeah, no thanks. Take a look at Dell for a second. See these numbers? 189, 174, 129, 95. Well, those are great numbers. There are certain stocks that are going to have great numbers and certain stocks are going to have crappy numbers. I have a tendency to stay away from the stocks that have crappy numbers because what goes up must come down. See, down, up, down, up, down, up, down, up, blah, blah, blah. That's all they do. They go down, they go up. That's it. So where you jump in, what direction you think it's going. All these things come into play. And it's not that difficult. High, low, is. Look at the motion. Down, up, well, where's it going now? Well, if you look close enough, from here, TDS day, to here, well, now it's coming back down again. The stock chart will tell you exactly where it's going. You just have to be able to look and see what you're looking at. 30 days ago, we're down here. Now we're way up to here. Okay, that much of a profit in that short a period of time, because that's 30 days. That much profit from 110 to 128, that's that's $18. $18 move on a 110 stock, that's over 14, 15%. Yeah, there's going to be profit taking. It started on Friday. Thursday was the high, Friday was lower, today was lower. So Dell, I want to put Dell down for 3 weeks. I think it's going to take 3 weeks to come down. But what do I know? Maybe 2 weeks. Let's take a look at it in 2 weeks and see what happens. Because I like Dell. Dell's almost the same as Intel. INTC. Wait till you see the numbers. Okay, at the money, 61, 35, 19, 10. Those are nice numbers. 3 strikes out, and you're still getting close to 50, close to a 0.5%. See, 23.30, 3 strikes out, you're getting 10 cents, which is just a little bit below 0.5%. Well, 0.5% a week is 26% a year. Well, I like 26% a year. I prefer 50, but 26 is not that bad at a 0.5%. And that's 3 strikes out of the money. It's always going to be a balancing act. What did I buy it for? What strike price did I sell? What's it at now? What's it doing? Where's it going? They're not that difficult questions. So what else do we got? Holy cow, you guys are no more questions? That's it? We can end early tonight. I have no problem with that whatsoever. All right, let's do one more, and then I'm going to call it a night because you guys ran out of questions. That's weird. Weird, you guys. All right. How about AEO, American Eagle Outfitters? A-E-O. You are the vowels. A-E-O. U. Okay, remember 3 to 4 seconds. Here we go. High, low, was, is. Look at the motion. Up, down, sideways. Simple. That's like 3 or 4 seconds, right? Where high, low, where was it, where is it? Sideways, down, sideways. It's not that difficult. So AEO is at 10.15. 10.15, the 10.50 is going for 5 cents. No. The 10s are going for 30 cents. I'm losing 20 because I'm taking away 10. That means, yeah, I'm making my 1% off of this one. Do I like it? Well, let's take a look at it. Who do we have there? Donna! What's happening, Donna? Whoops. There we go. I haven't looked at KHC. Does it fit your strategy? Yeah, Lily, I love Kentucky Fried, not KHC. Kraft Heinz Corporation. They make Heinz 57 sauce, Heinz ketchup. Anyway, so AEO. A year ago, we're at 2074. We topped out at 2289. Now check this out. 2289. Well, now it's at 10 bucks. That is a 50% drop. If you're not ready for that, you shouldn't be playing this game. But she drops 50%. Look at the last 30 days. Okay? We're here at 10. We drop down to 9. We shoot up to 10. Now we're back down here. Now she's going back up again. Down, up, down, up. Well, this is great. But that's only one day to the upside. So I would probably wait one more day before I jump in. Haven't looked at KHC. Tomorrow morning, Citi reports earnings. If it beats estimates, will other bank stock go up? It's a good question. KHC rumors that it will split into 2 companies. Please check the 725 week of AEO. 725. It's 11 days. Okay, still 3 strikes out, it's at 0. And 3 strikes out, the 40, that's 2%. That's still 2%. Okay, see, it's going for 40, the 10. It's going for 40 cents, but it's at 10.20 now, which means I lose 20 cents. So I'm walking away with 20 cents. That's only 2%. 1%, 2%, it's 2 weeks. It's still 1% a week, no matter how you look at it. Okay, Lily wants to take a look at KHC. KHC, Kraft Heinz. Ooh, nice. I like that one. Oh, let me go over this side. Okay, high, low. Where was it? Where is it? Look at the motion. Up, down, up, down. Now she's going back up again. Bottom of the year, right there. That's the bottom of the year, right there. So let's zoom in a little bit closer. Okay, check it out. Down, up, down, up, down, up. If you like Kraft Heinz. Now, for a 30-day chart, it doesn't look that good. But on the 1-year chart, it looks pretty damn good. Okay? A year ago at 36. Now she dropped down 26. Now she's going back up again. Well, great. 27.80 is the current price. So the 30s, sorry, the 28s are going for 21. Next week it's going for 38. It's not 1%. Sorry. I'm part of your Patreon group. Lima Gias. That's your name, Lima Gias. Felix, Citigroup. Let's take a look at Citigroup. See me. Oh, hell no. Unless you really like it. Look at it. 72 jumps up to 88. What is that? 14 bucks. No, 16 bucks. $16 on a 72. That's about 25%. 25% jump. Now she's pulling back. Don't know. Don't look good to me. Are there dividends on Misty? Yes, there are. I wouldn't touch Misty with your money, but that's just me. BTU. Mindy wants to take a look at BTU. Interesting. Take a look at this last couple movements. Kate Peabody. Okay, she dropped, shot up, dropped, shot up. It's at the 30-day high today, and today it looks like she's coming back down. because she closed yesterday above 520. Now she's at 1493. Is it the time for Peabody to come down? Don't know. Laurie, how do you make money by teaching us on YouTube? I learned a lot, thanks, but I don't get your motivation for teaching us. All right, Laurie, see if I can explain it to you in a manner why I'm doing this. I got several reasons. Reason number one, okay? In order for me to open up a hedge fund or a insurance dedicated fund, okay, so that means I can offer it to the public and I can guarantee people 20% of return per year. Some people like that. Hey, give me 20%. So before I can do that, I need 2 years, 2 full years of documented, unbiased, review of my trades. Well, I got thousands of people come here and watch my trades every single week. Every single one is recorded and on video and available. So that's reason number one. So yes, I will be having a corporation eventually offering to the general public, guaranteed 20% per year. Okay, great. But before I can do that, I have to prove that my theories and my trading is correct. The only way to do that is to share it on a public notice and to have it verified by a third party. Okay? Reason number two, I'm creating a video log for my children and my grandchildren. So do I get paid for doing this? I have no idea. I've never collected any money from YouTube, and I never collected any money from any video I ever put up. So I have no idea if it is even possible. I know some people get paid. I have no idea. I don't monetize my stuff, so, it is what it is. So I'm creating a video diary for my children and my grandchildren, because at some point in time, I won't be here. And this is my favorite part. I'm going to be a dick about my inheritance. So if and when I am gone, only way my children, grandchildren, or great-grandchildren get any money out of the estate in which I leave, they have to prove to the, not the benefactor,
trustee.
The who? Who is it again?
Trustee.
The trustee. Yeah, thank you. My children and my grandchildren have to prove to the trustee that they can be responsible with money. So if I leave my children millions of dollars and they don't know how to invest it for weekly cash flow, because if they cannot perfect this, they don't get any of the money, because they cannot and they will not be able to spend any of the principal. They will only be able to spend a portion. I'm thinking no more than 80% or no more than 90% of the interest in which they collect from whatever section of the portfolio that they're going to have access to. They will each have access to a certain amount. But if they keep screwing up and they keep losing, they get. I'm going to be a real dick about it. I really am. I was born poor, okay? We were on welfare growing up. There was 6 of us living in a 2-bedroom house, okay? I know what it's like to get government support, have government cheese. That stuff was good. But anyway, besides the point, none of my children or grandchildren are going to be able to inherit anything until they can prove that they can do it. And they're only going to be able to access the profits that their endeavors produce. They'll have access to the money, but they can't take any of it out unless it's a profit. Okay? So yeah, there's a reason why I'm doing it. And no, I'm not getting paid from YouTube to do this. Well, love that. They need to learn this, yeah. Well, do you play on CPI days? I don't even pay attention to that, tell you the truth. Because I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. So earnings and CPI index and any kind of stuff like that doesn't really affect what I'm doing. Because I'm looking at companies that are consistently profitable for more than 2 decades. So what's going on in the economy doesn't really have a whole heck of a lot to do with anything. Other than the fact they're consistently profitable. The trustee, thank you, Tim. Oh, love your video diary for your kids, yeah. Oh, can you check Goldman Sachs? Okay. Incorporate a spendthrift into your portfolio trust. Thank you, Tony. Hey, Tony, DM me your number. I'd like to have a chat because certain topics pique my interest. Letting your kids only spend profits is a great idea. Well, yeah. Okay, because I've been working since I was, since 1973. I think it was like 12 or 13 when I got my first job. Okay? Thanks, Tony. I was like 12 or 13 when I got my first job in 1973. Old Man Simmons Farm, loading firewood, picking tomatoes, doing a blue Hubbard squash, corn on the cob, green bean, yeah, all that crap. And the chickens too, can't forget those. Okay? We would work from sun up until sundown, and we would get $5. Yeah, back in the 70s, $5 was a lot of money. Okay? Because I remember when I could get a cheeseburger and a drink for $0.25. Paper route for you, cool beans. Yep, I did a paper route once. I didn't really like it very much. It didn't last very long. Can you brief us on what exactly market manipulations? Not really, because nowadays a lot of it's news driven. Okay, so I'll give you a good example. You got a couple companies that are just going through the roof. Oh, great. Look at the actual numbers. What is the cash flow per share? What is the profits per share? What are their dividend rates increasing like? Where is their profitability? It always comes back, for me, it always comes back to consistency of profitability in weekly options. That's what it comes back to for me. And yeah, some parts of the market are manipulated. But if you're following a stock closely and you see the bottoms, you see it go up, you see it come down, it goes back up, I don't buy at the high of the month. I don't. Because hypothetically speaking, from here, from 12 to 15 is $3. Well, a $3 move on a $12 stock is over 20%. Why would I jump in after a 20% in a 30-day period? Because you can't argue the numbers. You can't. Here's the bottom right there. Okay, from here to here is $3. $3 on a $12 stock is over 20%. So if a stock jumps up 20%, I ain't jumping into that. I'll take a look at it in 2 weeks. As a matter of fact, let's put BTU 2 weeks from now, because in 2 weeks you get your profit taken, then it'll come back down again. Fine. Then I'll look at it then. But until then, why would I bother keep looking at it? Okay, so BTU, I'll look at it in 2 weeks. If it's in the right position in 2 weeks, I mean, did its stock drop? Now it consolidates down here. Now it starts going back up again. Because think of it. Here, all of us, we have the same thing in common. We're all looking to make a profit off of the money we invest. Because we want to invest it, and we don't want to think about losing money. Right? We don't want to think about that. But it can happen. The stock can go down. You can hit the wrong button. You can make a mistake. That's what happens. A lot of people hit the wrong button. That's where most beginners lose money. It sounds childish and juvenile, but that's where most people lose most of the money. Yeah. There we go. Had to prove that I'm a real person every once in a while. Kara, how are you? Good evening, and how are you? All right, so back to what we're doing. BTU, we looked at XRP. Israel's chosen. Okay. XRP, sorry, dude. It's not a dividend stock. It has not been around for 20 years. Okay, you should look into getting the UT program. Lily, why don't you send me your number? We'll have a nice conversation. Maybe you can help me. Maybe I can help you. Okay, DM me with your number. Now, I say that every night. I love to talk to people, especially about investing. I like to hear what their stories are. I like to help them out. I'm at the point in my life where I have a calling, where I have I think of it as a responsibility to teach what I have learned over my lifetime. Okay, now we all know how this works. Okay, I have written a bunch of books. I do have a home study course. I do have a live paid trading group. I have all that stuff. I'm not trying to sell you anything, but we're all adults. We know how it works. Okay. Love that. Need to learn this. Blah, blah, blah. Got that. Triple review my order after a wrong button early on. Not quite sure what that means, but what I tell people, if you hit the wrong button, you pick up that phone as fast as humanly possible and you call your broker. If you can't get through, or if you get a business single, call back. And if they say, we have a lot of people waiting, can you please hold? Well, you hold, because that phone call is time stamped and time recorded. So if they see you made a mistake at 11:02 and you call back at 12:03, said, hey, I made a mistake, yeah, that ain't happening. But if you get on that phone ASAP, most of the time they will change it for you. Donna, view request, sent you a request to be on your live video. Unfortunately, daughter, I have no idea who you are. Okay, so I have no idea. Now, don't get me wrong, I love having guest speakers. I do. But I don't know if you want to talk about NASCAR, if you want to talk about hippo photographs or kitty cats playing with rainbows. I have no idea. So I only invite people on that I have personally talked to. So if you really want to be a co-host, send me your number. We'll have a nice conversation. And the next time you ask, then I'll say yes. Okay, human life zero-sum game. Jojo, I have no idea what you mean by that, Jojo. Can you brief us exactly market manipulations? My very first job when I was 15 was in an ice cream shop. Cool beans, Miss Lisa. Also driven by HTF, high frequency trading. Yep, that could happen too. Thanks for your knowledge. Bought high and liquidated. Okay. Alrighty. Mercy, trying to teach my children now. So that's awesome. Hey, Mercer, you might be interested in this. My grandson, which some of you have met, he has come on the show once in a while, said hi to everybody. Hyper little child. He loves being on the camera. Seriously, he loves being on the camera. He loves interacting with people. Here's the thing. Every week, we are actually having a video of me and him counting all the change. Because, you know, we're adults. We throw change in a change jar. Everybody does. It has a change jar, collection of pennies or whatever it is. Well, I'm giving them to my grandson. So we dump them out and we have a video of us counting them. And then every week we count how much change I've collected, how much change grandma and grandpa's collected, and the other in-laws. Then we take all that money and we invest it for the grandchildren. So it's an actual method that we're actually coming up with a program to share with parents and grandparents. And the grandchildren. So that the grandparents can teach the grandchildren about money and investing. Now, my grandson's 5 years old. Okay, he started out with $50. But my $2.50 this week, well, combined with my significant others, you know, $2 or $3, and then my ex-wife's $2 or $3, and then my son's $2 or $3, and then my daughter-in-law's $2 or $3, and then my in-laws, you know, they're $5 or $10. You add that all up, and by the time he's 18, and was it 13 years from now, if he's not a challenge, let's call it a problem child. If he's not a problem child, he will have access to that money. And we did the math, even at $5 or $6 per week over the next 13 years, compounded at 1% per week, that's going to be over $400,000 for my grandson. Well, that's a great leg up. And interacting with him on a weekly basis, say, hey, let's see how we can invest all this spare change. Now, we only use a Robinhood account with fractional shares. So he doesn't have enough money to buy, 100 shares of IBM or 100 shares of anything. But he can buy 4 or 5 shares of AT&T or 2 or 3 shares of Riot or 3 or 5 shares of whatever. And then as the stock goes up, coming into the dividend, hence the reason for the dividend capturing strategy, okay, he will slowly increase over the next 13 years. So we're going to actually be recording that, and that's actually going to have its own channel and its own program also. But it's specifically designed for grandparents and grandkids and parents. So you say, hey, let's teach our children how to be responsible with money. Because we all have change somewhere. Okay? All right. Green bean green. I generally do use more line charts or bar charts. Also, do you use moving averages, MACD, RSI, and your indicators to buy and sell? Whoa. Okay, hold on. I challenge my wife to compete with me on finding change in your everyday activities, as my brother I did growing up. That's cool beans. Howdy, mate. Wishing you well, ROI. Sunrio. Okay. All right. So anyway, the green bean green. Okay. Let me see if I can explain this to you in a manner which you'll understand. Okay. The trading strategy I am giving you for free here this evening and on every evening is I call Dividend Capturing 2.0. It was created for my 9-year-old daughter. Back in 2008, she climbed up my lap and said, Daddy, what are you doing? Can you teach me? So, can you teach me to a 9-year-old when most adults don't do it? So, I would like to sit you down with my 9-year-old daughter and watch you as you try to explain to her moving averages, the MACD, the retracement. Oh, let's not forget the Fibonacci sequences and the changes on those. Oh, why not throw in the Black-Scholes pricing methodology for standardized options? Let's throw that in there too. It was created for a 9-year-old. Adults have a tendency to make this more complicated than it needs to be. Is the stock going up? Yes, it is. Do I buy it when it's going up? Yes. Do I buy it at the high? No. So for a 9-year-old, it was simple rules. Rule number 1, never buy something it's not on the list. Rule 2, never settle a loss. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options. And Rule 5, make sure the numbers work. So for a 9-year-old to understand that, if it works, why do you want to mess with it? Think about it. Why would you add moving day averages, RSI index, all that other stuff, the MACD? Why do you want to throw all that stuff into the mix, just confusing a 9-year-old and making it take more than 2 or 3 minutes? Because it takes 3 to 4 seconds. High, low, was, is, what's the direction? Down, up, down, up. It's not that difficult. Adults have a tendency to make it more complicated than it needs to be. We got 3 minutes left. I'm going to sit down for these last 3, answer a few more questions, and that will be it. Okay. AT&T is terrible. I'm going to agree with you. It is. Trying to teach my children. Fantastic idea. Can't wait to watch the series. It's going to start pretty soon because I'm trying to get my eldest son, I'm trying to get my children involved. Now, my daughter, when she was 9, she was involved. She loved it. It was me and her. It was just our thing. But my boys, they could care less about money until nowadays because they're watching me do absolutely nothing. And they keep saying, Dad, where do you get your money from? You're not working anymore. I said, well, I've been trying to teach you guys for years. So now they're interested. So my son with the child, we're getting him involved. So me, my son, and my grandson will all be doing it together. So I have to coordinate with him to make sure because he is the dad. All right. So hopefully that works out. And I think we're out of questions. Fair enough. I came in part way. Glad to hear about the 9-year-old asking questions and wanting to learn. You know what? We haven't seen it in a while, so let's bring her on up. It's free money. Your strategy is amazing. Thank you, Mercer. But I did ask you, drop your number. I'll give you a buzz. We'll sit and chat. Seriously. Now, before I forget, I do not send email. I do not send text. I don't do WhatsApp. I don't do, what's those other ones? Snaps. I don't do any of that stuff. Okay, I am here. When I say drop your number, I'll give you a call. Don't put it here in the chat, but send me a DM. Now, we haven't done this in a while, so let's go take a look at the princess so you'll know exactly who I'm talking about. Right there. All right, there we got to go to the social media sites. There they are, social media sites. YouTube, here we go. Now, over on YouTube, you'll see I have over 1,100 videos. That's a lot. That's a lot of videos. Yeah, see, 1,100 videos. But I only got 5,500 subscribers. Isn't that weird? 5,500. All right, so we got 2 live streams going at the moment. So you want to go to videos. Okay, I want to go to the oldest videos. And here's the little princess right here.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting.
All right, there's me. Long time ago. Look all the hair I had. Oh my goodness. Here goes my favorite part. You ready? This is my favorite part. Ready? Here it comes. Here it comes.
paying out dividends. Anyway, seriously.
That makes me laugh every time I see it. Now, the reason why I'm showing it to you is because 15 years ago, look, I had all that here, no gray. Behind us is our EX dividend calendar because they didn't have one 15 years ago. We had to do it on a big whiteboard. Yeah, it's funny, isn't it? So we had to do it on a big whiteboard, and to spend time with your daughter or spend time with your children, because my sons had other interests. Okay? Yeah, you like that one? So my sons had other interests. So my daughter, she liked stocks and investing. So great. We do that. My boys like something else. So anyway, with my daughter, we'd have fun and we'd make, weird, fun things until she was 13. Then I have no idea what happened to her when she was 13. I know what happened, but it's, we don't need to get into the burns and bees, but anyway, fair enough. Thank you. Give the kids a backyard project, pay them $100 and show them what you make in a day. Absolutely, Tony. Do you have an opinion about car manufactured stocks? PE ratios are great in comparison to U.S. technology stocks. Laurie, Lauren. Oh, I've been calling you Laurie. It's Lauren. I'm sorry, Lauren. Yeah, I love a company that's consistently profitable. I honestly don't care what they do. Okay, now there are some car companies on my list. I do General Motors and I do Ford. I don't think I've ever bought Chrysler though. But my rules are the same no matter which way you look at it. Is the company consistently profitable? That's the most important one. Do they have weekly options? Just those two right there eliminates 97% of every single other company out there. Okay, now I don't apologize for what I do. I know what I'm doing and I've been doing it for a while. So I have no intention on changing whatsoever. So if you look at my videos from 10 to 15 years ago, you'll see me saying the same things and investing in the same stocks that I bought 10, 15 years ago. Because if it ain't broke, don't fix it. If it's working fine, leave it alone. I'm terribly sorry, but that's the mantra of us Gen Xers. I don't know why people keep calling me a boomer. I'm a Gen Xer. Okay, so I really honestly don't care. I don't really play those kind of games. It is what it is. Sun rises in the east, settles in the west. Okay, water's wet, dirt is dirty. Clouds are white and fluffy, the sky is blue. I like things that are factual. Terribly sorry. It is what it is. Do you have an opinion about Yeah, no, I don't. Okay, so that's it. We're done with questions. I don't see any more questions. That's it. That's all. You guys have a great day. Now, if you guys over here on Zoom, sorry about that mix-up with the with the link. Yeah. Thank you, Timmy. Yeah, you're officially off my Christmas card list, dude. I'll catch you guys in the morning. Have a great night. And leave the meeting. And over here, you guys have a great night over here. We'll see you tomorrow. And over here, we'll catch you guys tomorrow too. All right, and done with there. And you guys over here, have a lovely evening. And we'll see you tomorrow. Tomorrow, we'll see you tomorrow. And over here, you guys have a great night.